Hey, good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Welcome to a very special Veterans Day week. Big thank you to Fox Business Maria Bartiromo for including us on Fed Day last week to continue our discussion and dialogue. Heading into the taper last week, the Fed delivers as expected. No big surprises. This Fed, there was some talk heading into the taper position, certainly playing a role with 10-year yields getting in and around 170. Somehow this Fed was going to come with some big surprise. There was really one mission for the Fed heading into that meeting last week: deliver the taper. That they did. They've been very transparent, unlike some of these other central banks as of late, with very clear mixed messaging. We can really debate the timing of this taper. Certainly, we've been somewhat critical in terms of the Fed not tapering soon enough. But the reality is, from a messaging standpoint, and a lot of credit to Chair Powell here for leading and guiding the market into this taper last week, very seamless. In conjunction with that, also pushing back on the notion of rate increases, no big surprise there. Interestingly enough, today we will hear from Vice Chair Clarida at 9 a.m. He'll be talking about the Fed's flexible inflation averaging. And mind you, the vice chairman likely to leave the Fed the beginning of February, but his work around inflation, how the Fed is looking at those dynamics within this framework, clearly relevant, but certainly in prior days in 2021, when the vice chair was asked about when he thought the Fed would potentially be wrong on inflation, he did point to this timeline of late 2021 into 2022. The chairman clearly at his presser last week saying that inflation is likely to subside in the second to third quarter of 2022. Now, we've seen nothing inappropriate with the market pricing in some rate increases in 2022, but that creep further into the Fed's linear timeline, which would take us into June, and certainly, as the chairman said, they can go slower, they can go faster. A faster taper would probably imply rate increases being moved back in. But that creep now has faded. And now, unlike a couple of weeks ago, we have two rate increases priced by the beginning of 2023. The end result of that has been obviously a sharp rally. We've seen global yield curves coming out of the Bank of England meeting sharply rally back. But the reality is, what do these central banks want to do? On one hand, they're saying we want to fight inflation, and then on the other hand, they're saying not so fast. It's likely somewhere in the middle. So the pricing that we're seeing right now in terms of the U.S. short end of the yield curve seems rational, with a couple of rate increases that will follow a taper, which is likely to take us into the middle of 2022. With regard to this week on the ground, we've got inflation data, which will be front and center, CPI, PPI. We've got the Treasury's quarterly refunding, so this taper announcement clearly coincides with the Treasury's announcement last week of a drop in coupon issuance, so more than offsetting the taper in and of itself. We'll get 3s, 10s, and 30s before the Veterans Day holiday. On the economic side, like I said, we'll get the inflation data earlier in the week, and then at the end of the week, we'll get the JOLTS report. And in terms of Fed speak, we will get Vice Chair Clarida today. We'll get Powell twice, Williams, Bullard, full slate of Fed speak following last week's meeting. Wishing everyone a great week ahead. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities.